Hi, this is my first YouTube video on seeing the plight of Indian and world investors who lose money in stock market. I prepared this video. I think it will be useful to all investors in the world. Please, if you like it, please share it. Thank you. My first commandment is to put surplus money which is not needed for next 10 years. Many investors are losing money as they put their money which will be needed within a period of next 1 or 2 years. As stock market is taking time to go ups and downs, short-term risk taking is not desirable. So when money is needed urgently, many investors sell their stock at the bottom price, thus incurring heavy loss. Secondly, choosing a good broker who is registered directly with exchanges is necessary. It should provide cheap brokerage, good customer care, and trading module must be simple and easy to operate. Prefer discount broker if you do not need any technical knowledge. Government plan to take steps to keep the money in investor account to avoid blocking of money in broker's account when it is not used. One of the most important commandment is that don't be greedy. Set a target with 10 or 20% appreciation. If it is achieved, come out of it without waiting for more rise. If you take profit of 1% in one day of stock holding, it is equivalent to 365% of profit. So when you check the target, check number of days of money blocked and work out percentage. In Indian market, fall is more than rise, and hence one should be very careful for picking the target and come out of the stock after achieving the target. Before purchasing a share, analyze technicals like earning per share, price earning ratio, growth rate, dividend more than bank rate, consistent dividend, book value, present market condition for said share, etc. This will only save you from loss and ensure dividend payout even if market is down. Another most important commandment is investors should avoid fear on seeing stock market goes down drastically. Just like a wave, market is having the capacity to rise to that level of wave again. But it takes time. In a cycle of 10 years, we can see the market ups and downs in large scale at least 2 times, thus reaping profits. Many persons are committing suicide as they trade with others' money or their own money, which is kept for some activity but lost the money in trading. The next one is normal important yardsticks. Among the technicals which we have discussed earlier, price earning ratio can be 10 or less for manufacturing and metals. It can be 10 to 30 for software companies. Past data for 5 years will give good picture. Also, government notification, world market are to be watched daily so that we can change our portfolio. Choose your IPO carefully as many runaway firms are coming with IPO to loot money when market is booming. Anil shares, Paytm, LIC are some of the leading IPOs which caused heavy loss to investors at the present price almost nil to 30 to 40%. Grey market price will tell some idea about the share of IPO, but we cannot believe it in full. If grey market price is more, then heavy subscription is expected and we may not get good allotment and our money is blocked to that extent. Avoid option and future trades as it is equivalent to gambling. Your money goes into flames if you fail in option and futures trade. At least in shares, you got your shares intact and it will go up later on one day. Many investors are tempted by brokers to use the margins and purchase more shares than capacity. Normally, he ends with a loss as he has to close the margin on the same day itself. Since nowadays, big money bags like foreign institutional investors, FII and DII, are colluding to trap the investors in option future trades, seeing the percentage of put and call options and future trades. This is especially so due to daily option trades, so avoid gambling. Those desirous of steady income can opt for bonds in stock market. Many bonds are available just like shares, and their interest is more than bank rate. The only lacuna is that they give interest mostly off yearly or annually. But for purchasing bonds, should study about their grading like safe, more safe, etc. This can be had from financial portals like NSE, BSE, or Money Control, etc. Don't go in for big interest bonds which are not safe, as your capital investment will be in danger. After purchasing the bonds, it's better to check their ratings in the financial portals. Last but not the least, always cross-check the contract note with the exchange rate details sent to investor on daily basis. Nowadays, NSE BSE are sending daily sales report directly to investor in their mails along with the depository details of stocks. This can be verified by investors so that accuracy of transaction and number of shares in deposits are ensured. But one lacuna I noticed that NSE BSE just give daily transaction at time wise. No one will be interested to count the number of shares traded and compare this. So I request SEBI to advise both exchanges to include total number of shares and amount for each share so that it will be easy to compare by common investor. Best of luck. If you like this video, kindly like it and share it. Jai Hind.